Welcome to episode 1 in a 4-part series on the Australian live cattle export trade. In this episode we'll be taking a look at the Australian beef industry as a broad overview. Then we'll turn to the last 3 decades of the trade, looking at the value and volume of the live cattle trade, and we'll finish up at the end of this session looking at the relationship between domestic slaughter and the live cattle trade within Australia. Turning to the beef industry overview for the last 5 years, we can see that the live cattle export trade has accounted for around 12.5% of our industry flow. And if we look at the state breakdown of point of origin for these live cattle, we can see that Northern Territory is the biggest sector at 53% of our live cattle trade, and West Australia at 41%, and then followed by Queensland at 6% in third space. And the other states there don't even contribute more than 1% to the total live cattle trade. If we follow the diagram through to the destination points, we can see Indonesia is by far the biggest destination for our live cattle, with 50% of the trade going there, and Vietnam in second spot at 13%, and China in third spot at 8%. The remainder of the key destinations are listed below. Turning to domestic processing, we can see 87.5% over the last 5 years has been processed domestically. And looking at those slaughter rates across the states, we could see Queensland at 46% holds the highest proportion of domestic slaughter. That probably comes as no surprise given that the highest proportion of the herd resides in Queensland. New South Wales and Victoria fairly close at around the 20% mark of domestic slaughter, with WA at 5% and the other states grouped in together at 8%. So what's interesting about that middle column there, when you look at the proportion of live cattle as a point of origin to the domestic slaughter, we can really see how the Northern Territory and WA are very highly reliant upon live cattle as a sector of their industry, as opposed to domestic slaughter, where WA doesn't even make up more than 5% of the domestic slaughter, and the Northern Territory is not even significant enough to make it in its own right. It's grouped in amongst the other states. It's probably around the 2 to 3% domestic slaughter going through the Northern Territory. If we look at the overall breakdown of those domestically slaughtered cattle, we can see that 70%, or just over 70% of those, are destined for the offshore markets, namely Japan, USA and South Korea as the top 3, and the remainder of the 30% is consumed domestically. So turning to the chart of the last 30 years of our live export volumes and value, you can see that the inception of the industry around 1990, we saw significant growth in the sector, such that by about 1996 the industry was considered relatively mature, and we've had fluctuations in the volumes of live cattle going out of the country each year, generally between the 650 to 900,000 head level, which would be considered about the normal range from the time frame 96 to 2013. The average annual flow through that time was around the 780,000 head mark, and so movements outside of, say, below 530,000 head or above 1 million head would have been considered extreme, and certainly through the 14-15 period we saw the live cattle trade increase to above 1.2 million head, very much above what was historically the norm. That was largely due to local weather events, which we'll go into in the next slide. What's interesting is you take the statistical measure of the averages and the normal range from 96 through to 2017, so including that peak in the live cattle trade through 14-15, you can see that the average annual live cattle volumes going out were around the 850,000 head mark, and movements below 450,000 head or above 1.25 million head would have been considered extreme. So even including that peak during 14 and 15, those moves were very much an extreme level of cattle leaving the country as live export. Just turning quickly to the relationship between volume and value, you can see on the left-hand side chart, as the volumes increase, the value tends to increase, and as the volumes drop off through the seasons, the value drops off, and that's represented in the chart on the right hand side that shows the correlation between the annual change of volume and the annual change of value. So it's fairly highly correlated, as you would expect. So high volumes equate to higher values. Certainly as we get towards the latter part of 2014, 15, 16, 17, we can see the value increase significantly there. That was partially volume driven, and then as the volumes dropped away in the last few years, the higher domestic cattle prices have helped sustain that value somewhat, so that we have seen through the whole period a fairly steady growth in the value of the live cattle industry to Australia, and that's clearly evident by the orange dotted line. If we take a look at the relationship to live cattle to slaughter, we've created a live cattle exports ratio, which is largely the volumes of live cattle as a proportion of the volume of slaughter on any given year. So again, if we look at the industry from say 1996 onwards, when the industry was mature, we can pretty much say for most of the 96 through to the 2013 period, the live cattle export ratio fluctuated between 8 to 12% on any given season, and averaged around 10%. So looking at the statistics of that one, you can kind of say that anything below 6.6% as a live cattle export ratio, or anything above 13.3% as a live cattle export ratio, would have been considered extreme. Now what's interesting is we saw during that 14-15 period, when slaughter levels were quite high because of the drought that was being experienced across much of Queensland, you can see that the live cattle export ratio peaked at around 15.4%, which was very much an extreme scenario based off the historical data. Now what's actually happened to that time is, and you can see if you focus on the green columns, which is the annual slaughter levels within Australia, most of the time from 1990 through to 2013, slaughter ranged between 7.2 to 8.2 million head and averaged around the 7.7 million head mark per year. However, during that 14-15 period, when we had the very high turn-off due to the drought, we saw slaughter numbers within the country peak above 9 million head as we drew down that cattle herd significantly through that time in response to the climate. Now, how live cattle exports fit into the picture there is, we can see that the increase in the live cattle export ratio as a proportion of the slaughter really went up to the peaks nearly around that 16% mark. And what it's really telling us is that during that time when we were slaughtering a lot domestically, the live cattle export sector were able to act as a bit of a relief valve for processors, in such that they were able to put through more numbers via the live cattle export channel, and that took a bit of the pressure off the domestic cattle scenario. Had we have not had live cattle as an avenue during that time, the impact of extra cattle being slaughtered within Australia would have meant that the prices locally were even more pressured than what they were at the time. And they were already fairly low, and had we not had live cattle to take off some of that added supply, we would have seen prices within Australia even lower for live cattle. So, significant impact, a positive impact that the live cattle trade had during that time in able to act as a relief valve, obviously for producers to destock down another avenue, but also just generally through the season, the live cattle trade does allow for producers to more effectively manage their pasture even during the normal seasonal conditions, that they can adjust their whole stocking rates according to the season, and then when the season gets particularly hard, like we saw in 2014-15, they can use live cattle as another avenue with which to manage their size of their herd. So a fairly important part of the industry is this live cattle export trade, and something that really needs to be considered. So that's the first part of the episode on the live cattle trade. In episode 2, we'll take a look at the value chain and some of the live cattle hotspots around the country, and also the reliance on the live cattle trade that participants within the value chain have in terms of how much of their revenues are driven by the live cattle trade, and how reliant are these particular participants on live cattle across the whole of the value chain.